Hey guys, Jeff Marples here, real estate broker here in San Francisco. And if you're an investor in the city, there is some deal of speculation in the city. And I wanted to talk to you about something that I'm really excited about. I've been working on it for a number of months. When you are looking to invest in real estate, it's all about the numbers, right? And if you're not following a simple method of analyzing a deal and looking at your cash on cash, your IRR, all the benchmarks for you to get ahead, well, is it really speculation? I've seen in a number of years where the gross rent multiplier in San Francisco is, down in 2010, it was around 18%. Now it's, incredibly low. And when you're looking at those type of returns, yeah, it's a safe harbor, but, is it really going to give you the type of overall return? Because, in San Francisco, a lot of people just buy for appreciation. They're not buying for cash flow. And from my point of view, I don't like that, especially with rent control. You get some old buildings, you really have to have a strong stomach to deal with the city bureaucracy. And you also have to, know that, rent control tenants in the city of San Francisco are going to be really, really difficult sometimes. I'm taking a different approach, and I haven't really talked too much about this to anybody, really. I've been working for a number of months creating partnerships with certain people in other related industries in other states, quite honestly. Places where we have more of an emerging growth market to where there's a lot of jobs that are going into it. Also, quite honestly, we're looking for better returns, something that's more stable. We are, and I'm excited to talk to you about this because we have, I just had something off my desk that came in through last night through one of our partners. And I wanted to share it with you. And these are the type of deals that I'm starting to participate in. And I think it's a great option, for those people that don't necessarily want to put their name on a loan, for those people that don't want to be an active investor, they want something that's more passive. And the thing is, we are looking for very large, 100 plus 200 unit buildings in other marketplaces in the southern states of the United States. Typically, you could just say Texas, right? I found a deal that came across my desk from one of our partners. It's outside of San Antonio. It's a 253 unit building. It's a Class B commercial building. So really the strategy on something like this is to say, look, we want to raise capital from our investor partners in San Francisco. And really what I say partners is really, we really want to show that we're partners. And I mean that in different ways. One man is not an island, right? And so when you look at investment in real estate and you're really looking to get involved with larger commercial deals that typically are not on the radar of the individual investor, right? What we really are is a real estate syndicate to where we have partnered up with different real estate investing groups. We have people that are going to help acquire property, people that are going to help renovate and reposition these buildings, as well as, basically the bottom line is we want to increase the efficiencies by lowering overall expenses, making sure that the property management is in track, and then, find that value add to where we can increase the value of the property. And then, and so be it, think about raising just the rents on a 253 unit building, just raising the rent, by $100 a head, so it does compound and it does get very attractive when you're looking at those numbers. So really what we're looking at is commercial value-added Class B buildings that are typically 20 years old that we could reposition, and then on the backside of the repositioning, sell to a REIT. They want those Class A buildings, those buildings that, don't have issues that are performing at a very high level. That's not us. We want to find those Class B buildings, not necessarily a Class C building. We don't want to be in those, up-and-coming areas that will never turn, things like that. We don't really want to deal with Section 8 too much. I've got Section 8 tenants, and I don't really want to deal with that. But I think our strategy is really pretty sound, which is really nice. Large multi-unit buildings are very, very stable. Class B is especially stable, even in the downturn markets. So really what we want to do is raise capital out here in San Francisco, work with our partners to acquire property, reposition the properties, give great preferred returns, meaning that, you know, we work only with accredited investors, and they receive their money first. You know, the investors, you know, we want partners that are really going to participate, and what we'll do is end up, you know, once we acquire the property, we're always going to do probably a bi-monthly newsletter to those individuals to tell you where the property is, so they just don't give their money and then they're left in a blank, right? This is something that we want to be able to say, okay, well, if you have a little bit of money that's tied up in real estate, backed by real estate, we're able to, you know, reposition these buildings, get very good returns, better than the street typically. And then when we dispose of the property, you're going to be a partner in the equity as well. So, you know, overall, the one property that came off my plate today is a building outside of San Antonio. As I said, it's 253 units. The total takedown on the property capitalization is going to be just around $24 million. We're looking to raise a good amount of money to be able to do that, but we're sort of, in the deck, we're looking at an average annual return around 8%, with the total IRR for investors around 16%. So, you know, and it's all backed by real estate. So it's one of these things that I'm really excited about because, you know, it really alleviates, you know, when we partner up with different providers that really could provide us with the deals, they've done all of the due diligence, they've looked at the analysis of it. We fly out, take a look at the property, get really familiar with it. And at the end, you know, here's like a hands-off investment where you can participate in commercial grade real estate that is valued very large, but able and accessible to the, you know, regular investor. And the nice thing is, you know, the partnerships that, you know, we're in, you know, we could, you know, underwrite these things. We could have security in the loan. There's all sorts of aspects that are really safe for people. I think the downturn is really you just can't 1031 in or out of it. Once you're in the group, you could probably 1031 from a project to a project to a project. But at a certain point, you know, you just can't do the 1031 into it. But besides that, I'm really excited about it. Wanted to talk to you about it. If you're interested, you know, we are working with only accredited investors. Definitely, I could send you an old deal just to sort of wet your whistle so you could get an idea of the due diligence and the partnerships that we're creating. But anyway, give me a shout. I'd love to be able to talk to you if you're interested. My number, 415-336-9695, 415-336-9695, Jeff Marples. Anyway, thanks for watching, guys. I'm really excited about it. It's going to be a great 2018. I already have, you know, we're first week into the new year, guys, and I've already got a great looking deck right here that I reviewed last night. So give me a shout, and thank you so much. I appreciate the time today.